What is usually the case is that a company that beats expectations, the share price will respond to that for up to 3 months after the event. So you're sitting on a good stock, assuming it hasn't rallied about 25% on the day and has to come down after that. But usually a stock that outperforms does it for a while on the basis of a better than expected result, and vice versa. You come out with a shitty result, your share price will reflect that sometimes many months after the event. That's the regular scenario. What I noticed in August last year is that the macro element had completely taken over, and it was more about money flows shifting and about portfolios rebalancing. And in August you could have events like a Goodman Group reporting better result than expected, rallying for 2 days and selling off after that and never looking back. So we had a big macro element in August where all of a sudden those usual dynamics didn't really work for the time being. It's going to be interesting to see how that works in February this year. I'm assuming that we'll see a combination of, for example, if certain contractors to the mining industry as yet can't meet expectations yet, then I think that maybe on the first day or so they might still get punished. But I think the market will still give them the benefit of the doubt, because what isn't yet there in February might be there in August or February next year. So I think there's still natural support on the basis of anticipation and ongoing expectations. For the mining companies, I think it's predominantly now a case of listen guys, you have a few $1 billion coming in. What are you going to do? And some of them will still be paying off debt, but that's going to shrink pretty quickly between now and August. So it may well be that's more a case of August than February, but we will get the first questions asked in February. And then in general terms, because share prices generally are above average, I think anyone who gives a sniff of disappointment will feel it. I'm pretty certain. Investors are in a low volume environment where macro elements put a lot of uncertainty in the market. I think, and we have already seen a few examples like that where the punishment is quite severe, and I'm pretty certain that in itself will put the fear in quite some market participants that they would want to reduce the chances to have a minus 15% on the day stock in their portfolio, and that might in itself make market participants more risk averse.